With inflation rates increasing further, the ECB has joined the club of central banks hiking rates. And the first interest rate hike actually was larger than expected earlier and envisaged by the ECB because they were able to create and agree on a new instrument called the TPI, the Transmission Protection Instrument. With this, the fragmentation within the euro area should be prevented. If it works, and if it's allowed to work, will have to be seen. There might be court decisions coming up, but for sure, with the uncertain situation in Italy, where we are heading for snap elections in September, the new system might be tested. And then we'll see if the ECB is going to sterilize the purchases and to which kind of amount they will step in. With the working of this instrument, we think that the ECB is going ahead with further rate hikes pretty quickly. Up to the end of the year, we see another 150 basis points increases of the ECB rates, and then the deposit rate should be at 1.5%. With this, we're getting close to the upper level of interest rates, what we think is likely to be reached in the first half of 2023. In respect to the Fed, where we have seen already significant rate hikes during this year or since the end of last year, we have more hikes to come through, probably heading to a rate around or somewhat above 3% by the end of this year. With that level, we think that the period of interest rate hikes comes to an end, and facing a recession, although a mild one, we guess that the Fed at this stage, an environment where inflation is likely to come down, will do some correction of the earlier rate hikes in the second half of 2023. In our longer term forecast, we have taken into account this new interest rate environment. But we also take into account what has happened since the last version of our forecast that was just the day before the Russian aggression towards the Ukraine. Since then, we live in a period of Zeitenwende. And this new geopolitical order has consequences on the global economy. And this is not likely to be there for just a while. We think that this is likely to stay. And because of that, we have revised down our longer-term growth forecasts and see an ongoing upside pressure from inflation. And although we may have a pause in the hiking cycle in 2023, over that period, we see that central banks are likely to go up with rates again. So over the whole forecasting period, we have increased our rate forecasts, while growth forecasts have to be revised to the downside and inflation to the upside. And for all players, corporates and households, as well as governments, we will act in a new era in which we enter uncharted territory after the turnaround in interest rates and after the implementation of the Zeitenwende.